On the verge of economic calamity. Hey, everybody, you're watching Bull, Boom, Bear Bust. My name is JJ. As always, back with another dose of economic reality. So let's go ahead and get right into it here. We've got a few headlines to go over here, and I want to dig into a lot of the news articles here and get behind the scenes, or read between the lines, I should say, on a lot of these articles to give you the real picture of what's happening in the economy. First of all, if you want to hear some good news, oil prices actually dropped a lot. And it's interesting, though, my gas station here just down the street, the price changed from $6.16 to about $6.13 after oil dropped from over $90 down to, I believe I saw it get about $83 a barrel. 3 cents drop. For those of you not in California, you may think I'm joking. For those of you that are in California, you know I'm being completely serious right now. $6 plus a gallon. You can find it for like $5.65, $5.75 at some of the lower cost stations like Arco. Not sure why Arco is always cheaper. Maybe it's cheaper gas. I've always suspected that. But then I had somebody tell me that they saw the same gas delivery truck, tanker, go to Arco and then go down the road to a 76, and then go down the road to a Mobile. Said it was all the same gas, right? So how does Arco sell it for so much cheaper than these other stations? I don't know. We won't get into that in this video. I just did, so it's too late. I got into it. If you know the answer to that, please let me know. Is there any benefit in buying the more expensive gas, or should everybody just go to the cheapest place like Arco? That's what I see cheapest around my neighborhood. Anyways, let's get into the news here, because are we on the verge of an economic calamity? Well, I think so. And if you ask many people, the economic calamity already hit several years ago, when most of the population began living paycheck to paycheck. Now, it's been so normalized. Being in debt has been so normalized that people think there's nothing going on, that there's nothing bad happening right now, because it's the frog in the pot, right? You slowly go into debt over years and years and years. Back in the 80s, what credit cards came out in the late, was it the late 80s? Wasn't old enough to use credit cards back then, but yeah, anyways, when credit became more readily available, the amount of debt that people got buried under just grew and grew and grew. Now we're in uncharted waters, unprecedented territory, and the high interest rates, it's a ticking time bomb is what it is. But here's a couple headlines here I just want to read to you. And this is not me saying this. This is an actual headline. Business Insider: the collapse in Treasury bonds now ranks amongst the worst market crashes in history. So some people are saying market crashes aren't happening. Folks, there's a reason why yields are spiking on these treasuries, on these securities. There is a big sell-off happening right now in the debt markets, and the typical buyer, the central bank, is not there like it usually is. Now, the Fed is still in there. They're buying debt. We saw a big drop in the 10-year yield. Was it yesterday or the day before? So they're definitely still in there buying, right? That's not a real investor buying that amount of debt. But here's another headline. It's out of Fox here, Fox Business. New data reveals a crash not seen since the Great Depression could hit in 2024 if the White House and Congress don't cut spending soon. The results could be catastrophic. Here's the thing about that. Conservative news outlets have been saying things like that for decades. Back when the national debt was under $5 trillion. It's a disaster. They have to stop. They have to cut spending. This is going to make a crash occur. But what we see is not really a crash. When we do see a crash, we just see the whole system get bailed out, basically. Look at the dot-com crash. Look at the housing market crash, great financial crisis, 2008, when, of course, all the mega banks got bailed out. Even now, we had some banks get rescued earlier this year. Some of them got taken over. Others got rescued. In fact, here's a recent headline out of Reuters. The Fed says credit to wind down failed banks drops again in latest week. So even as of last week, they're still extending emergency credit to failed banks. This has been going on since March, and it's just now winding down. The Fed reported what it calls other credit fell to $63 billion on Wednesday, from 81.9 billion on September 27th. The credit is being used by the Federal Deposit Insurance Corporation. Remember, the FDIC, who is basically not able to cover even a small portion of the deposits. They had to team up, remember, with the Fed. We had that meeting with Janet Yellen and Powell, and they all got together basically and came up with this plan to rescue these banks. With the FDIC to deal with bank failures from the spring. So it's still ongoing, and we're going to see a lot more banks fail. Basically, all the banks are insolvent. They don't have the money that they've loaned out. Even the money that they are loaning out is just digits on a screen. It's not even in paper or physical currency form any longer. And that's bad enough, but they want to take it to the next level, and they want to have a completely digital currency, right? So the insanity, it never stops. It never stops. Well, let's get into some other news here. I wanted to touch on the housing market somewhat here. We've got homes unaffordable in 99% of markets. Unaffordable in 99% of markets. I've got some friends that just moved up to Minnesota, and it was a small town, and they paid just under $300,000 for a house. Nice house. But I remember back in 2010, 11, 12, here in California, even 2013, 14, you could find a nice, sort of nice house, not downtown San Diego, but in the San Diego greater metropolitan area. You could find a decent house for $300,000. So now here we are, less than 10 years later, and what homes were going for in California back then are now going for in a small town in Minnesota. This is a small town, about an hour and a half out of Minneapolis, right? So it's not even a suburb of Minneapolis. It's far out of Minneapolis, right? An hour and a half. And still $300,000. Wow. So you could say that that's affordable, yes, compared to some of the coastal cities and compared to many other areas. But here we are. Homes are now unaffordable in 99% of the U.S. for average Americans. This is out of Fox Business also. According to a new study, I mean, we all knew this, right? But according to a new report published by the real estate data provider Adam, which examined 572 U.S. counties and determined that the median home prices in 99% of those are out of reach for the average American income earner, who makes about $71,000 annually. Actually, I thought that was kind of high for annual. I thought it was closer to 50-something thousand. The average income earner makes about 71,000. The latest trend continues, the 2-year pattern of home ownership getting more and more difficult for the average U.S. wage earner. I think we might have been, this channel may have been the only channel to tell you that there was not going to be a housing market crash. Remember, this all started back in 2019 when the Fed engaged in sort of a rate hike cycle. It didn't last long because the then president basically threatened him, threatened to fire Powell, the chief there, and forced them basically to cut rates because he knew, just like I think all leaders know, that when rates rise, that's when you see some financial turmoil take effect. Now, the big shocker to a lot of people here that wasn't a shock to me is that the housing market hasn't crashed, even with mortgage rates more than double from where they were. And we told you this was going to happen, right? Not enough inventory. I wonder how many people from Hawaii that lost their homes are going to move now to the mainland looking for homes, which is going to exacerbate the shortage even more. At some point, yes, this thing is going to crack and we're going to see the housing market correct. But then again, if the emergency rate cuts happen before the housing market corrects, you could see home prices shoot up even higher. Now, do I think that's going to happen? I don't think so, but you can't take anything off the table. I know people that bought homes recently because they feel that inflation forces are going to be more than deflationary forces. So they feel like home prices are going to go up even more. And you can't really blame them at this point, can you? I mean, this is insane. In fact, even a broke government can keep spending. And we know that the total debt in the U.S., if you roll everything together, not just the national debt that we hear about most of the time, the 33 trillion, if you roll up all the debt, the corporate debt, the personal household debt, of course, the national debt, you're over $103 trillion. That's $103 trillion with a T. But yet, a broke government that has to continually borrow more money just passed a 45-day funding 45-day funding plan. So, what's going to happen after the 45 days? Now, many people are saying, okay, mid November, that's when we're going to see the collapse. The government's going to shut down. Or will there be another 45-day extension or another one after that? And why can't they just keep going, right? That's what people are asking. People are saying, it's crazy that we have to even sit here and talk about this. Could something happen where they don't pass another emergency 45-day, whatever, 90-day, 180-day? Does it matter at this point? Could it happen to where it doesn't pass? Sure, there could be some political upheaval and disagreements amongst the lawmakers, and we don't see it get funded, and we see the shutdown. Now, many people are saying that that's going to lead to a broader recession. Janet Yellen's out there saying that a government shutdown will definitely increase the odds of recession. Well, what's headed our way is a lot worse than a recession. I've always called it here the Great Depression 2.0. Right now, we're in what I think is a silent depression. And back to what I said at the beginning, people have become so accustomed to taking on just enormous amounts of debt that this doesn't seem like anything unusual or abnormal right now. But there is a hashtag trending on social media, silent depression. And when you look at people trying to buy homes nowadays, it's a sad story. I just read an article too that a record number of people under 25 are swarming basically to the Midwest, and that's Minnesota's one of those states, Wisconsin, Indiana, Iowa, states like that, to be able to buy a home, right? And I think when this is done, a lot more people are going to want to go to smaller, more rural areas for other reasons, not just because home prices are cheaper. I think the bigger cities, the metropolitan areas, are going to get so dangerous from poverty and crime and desperate people that you're going to see even a bigger surge than you saw in 2020 with the health crisis. You're going to see even a bigger surge out of the cities, out of the major metropolitan areas into the countryside in small town USA. Actually, I was raised in a small town. I think there's a song out there about a small town, right? I was born in a small town. Anyways, I was born in a small town. Now I live in kind of a big city. I'm on the outskirts of San Diego. But where I grew up, you had to walk a minute at least to get to the neighbor's house, right? So I was on a big farm when I grew up. And back then, everything seemed so easy. Never thought about food running out. In fact, a lot of our neighbors in the neighborhood ran farms. We had people growing corn. We had a pear tree orchard just down the road, and my dad knew the owner. He's like, "Come pick as many pears as you want." Just food was always there for free, and just cherry trees down the block. Grape farmer. My teacher had a grape. We called it grape farm, grapevines. So during the summer, we'd go there and just get free grapes. It was just like free food everywhere, and I could see how people want to get back to that. They want to get back to the farming communities where your neighbor, your friends, people in your city, they all grow stuff. I mean, to put it firmly. Now, living in the cities here, you're going to have everything shipped in. Shipping costs are high, food costs are high, and people are struggling. Now, many people pointed to October as the month that what's going to hit the fan. We've got the student loans having to be repaid now. Well, even though we're only a few days into October, we already see the savings rate has plunged. I'm looking at the personal savings rate put out by Fred, that's Federal Reserve Economic Data, and we see it's dropped again. Now, the lowest that we got here in the past few years was back in mid 2022, and it's kind of surprising that the savings rate increased since then, but we're starting to drop back down again if you look at a chart here. But from all-time highs, near all-time highs back in 2020 with all the rescue programs that were put out there and the pause in all the payments, gave people a record savings rate. But now only 3 years or so later, we're now back close to all-time lows, right? So that's the state of the U.S. consumer right now. It's not looking pretty, not looking pretty at all. Back to oil here. Oil heads for biggest weekly loss since March on demand concerns. So why would there be demand concerns? I thought everything was fine. The consumer's strong. Remember, Jerome Powell came out and said that. Janet Yellen came out and said the consumer is strong. So if the consumer is so strong, why are there demand concerns, right? People have unlimited plastic to swipe to go and pay whatever they need to pay for fuel. So why would there be a loss on demand concerns? Well, it's pretty interesting. We'll have to keep an eye on that. CNBC, recent article here. There won't be a housing crash, just some turbulence. So we're using some airliner terminology here. Not a crash, but some turbulence. Interesting. Yeah. So I don't think there'll be a crash either. I think before the crash happens or when the crash occurs, that's when you'll likely see emergency rate cuts at the beginning of the crash. Now, remember in 2008, we never saw prices fully correct. Does anyone think they're going to let prices fully correct this time? I don't think so, but that's a CNBC article saying no housing crash. All right, let's get into a little more entertainment news, maybe something on a lighter note here. We have a reality star out there. I'm trying to figure out how to pronounce her name. Kim Zolciak. All right, she's a big reality star. She was on the Housewives series, and I was actually forced to watch that a few times when my mother-in-law was in town. That was like one of her go-to shows. So I sat there while I was editing videos and watched a bit of it, that was on TV. And what they like to do, a lot of these wives, they call themselves, but a lot of them are single, so it's pretty weird. But the show, The Real Housewives, is a lot of these couples, in some cases just single girls, single women, basically flaunting their wealth and having all these extravagant parties and buying all these luxury handbags, $5,000, $6,000, $7,000 handbags. Well, here's one of them right here. Kim Zolciak's mansion is back in if I could talk, pre foreclosure. And this has been on and off. They're in foreclosure, they're not. They come out and say, no, these are just rumors. Well, again, they're saying they're in pre foreclosure. And now this time, here's an article out of Page 6. Kim Zolciak sells estranged husband's designer sneakers as house faces foreclosure. She's also selling some of her daughter's designer bags and clothes. So it looks to be for real this time. But this is an example of how looks can be deceiving, right? I watched this show and I thought all these people were just, off the chart wealthy. But you find out a lot of them are living on credit, and a lot of them took out huge mortgages to have a house on the camera that they could show off in. And some of them are doing pretty well. I mean, there's some entrepreneurs that came out of that show that came out with other products. I can't think of the names. I mean, it doesn't matter. But the point is, we have celebrities actually feeling the pinch right now, and we haven't really seen foreclosures on a larger scale really start to pick up yet. They've been increasing, and they're definitely up pretty significantly from the lows, but the lows were so low that even the pickup in foreclosures is still near all-time lows, right? So we're still near all-time lows as far as people being behind on their mortgage, getting foreclosed. But that comes with a few things. Remember, the student loan payments, that's a big part of it. Not that a lot of these student loan borrowers have homes, but remember, when people have free rent, remember all the free rents, and when people have extra money to spend because they don't have to make their student loan payments, they can afford higher rents. You're now going to see the vacancy rate spike up in rents. So therefore, it's going to be more attractive to rent, and that's going to pull even more demand out of the housing market. At the same time as we have these high rates, we have homeowners with enormously high costs of owning, with insurance, HOA fees in many cases, the energy bills, utility bills, the repairs are higher, a new roof repair, everything is higher, air conditioning repairs. Yes, we're going to see the housing market start to drift downward more rapidly here, in my opinion. Also, we have, in the past 6 to 12 months, we've witnessed a lot of people taking money and taking emergency loans out of their 401k and retirement accounts. Now, a lot of that was because people lost their jobs. And when you lose a job, or when you switch jobs, when you leave a company, you're then allowed to take your money with you, your 401k money. Otherwise, it's very difficult to get that money out of there. Now, you're still going to pay a pretty hefty fine to Uncle Sam. So I don't encourage people to do that. But the truth is, in desperate times, people do raid their retirement accounts and they raid their 401ks. And that's what we saw here with record outflows from retirement accounts over the past year. I think a lot of you probably remember, if you've been on this channel, We reported about that right here, right? So we have to keep an eye on all these things. People are wondering, why the housing market hasn't crashed. Why haven't the prices of automobiles crashed? Why haven't rents crashed? If everybody's so broke and living paycheck to paycheck, why are we seeing the cost of living and these asset prices remain elevated? Well, a lot of the reasons that I just gave you right there. So a lot of stuff to think about, a lot of moving parts here, when it comes to finance and economics. But as always, we're going to stay on top of it here for you. And I'd like to hear from you down on this in comments on this channel. Please let me know what you think. Thanks to everyone here that supports this channel. Really appreciate you being here. If you'd like to support me, there's a super thanks link down there. Also, just a like and a thumbs up and subscribing helps out tremendously. I've seen my videos not really getting promoted much lately here from this platform. So appreciate every one of you helping me in this channel here to stay alive. If you appreciate the news, please. All right, everybody. Thanks, everybody. We'll talk to you very, very soon. Keep stacking, and we'll see you shortly. Bye now.